It's June 3rd, and this is the video log. It takes 30,000 to a million. What's gonna happen? But first, before it happens, I'm gonna show you some red days here on the account. I'm actually losing to the market quite badly, down maybe $6,000 on the account. I'm gonna do an account review and just things that I'm excited about, and my thoughts, briefly my thoughts on the market, but not too much talking. Probably keep it around 10 minutes today. We'll see. So this is my account. Got it. I'm 176, 2038. So basically reversed all the gains from yesterday, which is not cool at all, but happens. This is the day chart, negative 3.28% or so. The week chart, minus 2%. Month chart, minus 2.25. 3 months, minus 0.75. So basically all of these turn negative. The 1 day, 1 week, 1 month, 3 month from today's action. So that means I'm pretty much even on those 3 months, I guess, or over the last 3 months. This is the year chart. I'm still up 12%, and this is the all-time chart. I started investing here in 2018, August 28th. I'm gonna go briefly through the account, starting with the options on the right. In this box, you'll find all the information you need, like the ticker symbol, strike price, whether it's put or call, the expiration date, number of contracts, and whether it's a sell or a buy. The numbers on the right represent the daily change in value up top, and then in percentage terms on the bottom in the green or red number. So I'm trying to see how fast I can say this on each episode. A lot of the calls that I've sold are actually, helping soften the blow of today's decline. The decline was mostly caused by my dear friend Apple, which reduced its value in my account by itself by like $3,700, which is where more than half of my losses came from, which is understandable because the account is largely Apple, more than I think about half of it. So Realty Income minus 1.5%, Main Street Capital dropping down 1.6%, JD.com minus 2.4%, VIP Shops minus 3.8%, Goldman Sachs down a little bit under 2%, and Smith & Wesson down 4%, but still over that $15 mark, which I really need because I need to sell them at $15 because I have sold call options against this position expiring on June 17th. And it'd be great if I get some extra cash, but if not, that's fine. If it finishes a little bit below 15, that's fine again. I'll just sell some more call options and make some more money, but I don't want it to finish too far down below because then I'll be sitting at huge losses, and that's not an optimal scenario. Total market value of the account is $207,000. You'll see that the margin has increased by a tiny bit. I'm now sitting at 14.92 because I just bought a few shares of Realty Income and Main Street Capital. I'm trying to really get some good deals on these because I think they're going to return this, these great percentages over the long term. So like next year and the year after that and the year after that, I think I'm looking at some really good returns from those two positions. So I'm trying to stock up. My ultimate goal is to make Realty Income and Main Street Capital, that's sorted by equity. So Main Street Capital and Realty Income, I wanted to comprise like at least 50% of the account at some point. I need to sneeze. There's no edits. Sorry. So, okay, that's the account tab. Some things that I want to show is, let's see, Goldman Sachs. I sold a couple put options earlier in the week. Oh, I'm getting a dividend, by the way, from Goldman Sachs, $60. I'm getting quite a few dividends. I think $500 worth of dividends this month. Well, if you count this, that's like 600. So that's nice. So I have sold. Oh, look at this. I sold a couple put options for $306 and they expired today, which is nice. Also helping to soften the blow a little bit. So I didn't want to roll them because I think that next Monday we may have a little bit of correction in the market, further correction, since today didn't finish very favorably. Who knows, but it could happen. So my thought is basically that I don't want to roll options if I think that there's going to be a lot of change the next weekend, because then the arbitrage that I'm trying to do, which is trying to basically collect the difference between implied volatility and actual volatility. So that's my big thing, right? If the implied volatility is very low, but I think the actual volatility is high, I'm going to try to pull the money, out. I don't want to participate, because then I'm taking more risk than I'm being compensated for. So what I'm trying to do is the opposite. And hopefully the volatility that I think is going to come next week comes on Monday. And then I'm able to sell that volatility. I'm able to sell some options and get premium in order to collect that theta decay by the end of the week. Get that premium, right? So that's the idea here. So I'm going to have quite a bit of cash to play with that's not mine at the end of the weekend on Monday. Now, as far as the market goes, I think that right now where we're at is in a correction in the bear market rally. Okay, so it's a correction within a correction of a larger trend that's actually down. But if you want to put it into further context, this bear market that we're experiencing right now is actually in I think, a very, very long-term bull trend for many reasons that I don't know if we have time to discuss today. But to explain that, I think that do I have a draw? Let me see if I can find a drawing app of some sort here that I used to use. Sketchpad? No. Okay, let's see. New. All right. So you and I here. Outline. Is it a pen? Okay, it's a pen. So I'm thinking, we're in a very long-term uptrend. Let's draw that again. And right now we're in a bear market. And I think we're right here. Right? And then there's a correction in the bear market rally. And I think the bear market rally will continue before it resumes its bear market trend. All right, so that's what I'm thinking. Now, am I a technician? Is this technical? This is definitely not technical, proper technical analysis right here. But those are just some of my thoughts. And I am making this conclusion just based on observing the markets for like 20 years or something. So this is not like some scientific, something you can point to kind of prediction. But it doesn't really matter. Like, that's the point. I'm just going to make a deal whenever I think the market conditions are favorable. I'm not going to make deal if I don't think it's a good deal. It's just simple as that. Like, I don't need to have that much predictive power. I don't need to have predictive power in order to, make trades, is what my point is. So that's the plan. Those are my thoughts of the current market conditions. I have a couple more videos to do on company reviews, by the way, and I will get to those, and I really enjoy doing those. So you can even give me some more symbols that I can look at. I still have, I think, Goto or something like that. I forget. But I have a couple more to do. Levi. And then I would like you guys to suggest some more symbols that I can do. I can review the company, give it a little overlook, maybe talk about the industry that they're in, some of the risks and that can be expected in that industry, some perhaps unique and idiosyncratic ways that these companies are valued within that industry and how debt relates to it and everything else. So I can add some perspective even if I don't know the company well, just by looking at the numbers. Hopefully it's not an ADR though, because foreign companies are not listed on my favorite sites that I get information from for stocks. So hopefully ones that are listed in the NYSE or the NASDAQ, that'd be great. Other than that, I would like to know if you guys are also making money or losing money today. I've definitely lost, definitely losing to the market today, even the NASDAQ, even if NASDAQ's having a nasty drop, still losing to it. Feels bad, but we'll bounce back tomorrow. Not tomorrow, on next week. So no worries. All right, I'm ending right there. Peace out.